45% of young people struggle to accumulate 100,000 yuan in savings over their lifetime, with consumerism and cognitive gaps being the primary causes. 100,000 yuan is not merely a number, it represents the foundation for risk resilience and wealth growth, marking a crucial leap from passive survival to active control over one's life. The path to accumulation hinges on self-discipline and long-term planning. In early spring 2026, discussions about household wealth quietly intensified in Beijing's financial street. The latest data released by the central bank plunged financial professionals into deep thought. Among China's 18 to 45 age group, approximately 45% never accumulate stable savings exceeding 100,000 yuan throughout their lives, with per capita GDP now exceeding $12,000. Why does this seemingly modest threshold of 100,000 yuan remain an insurmountable barrier for most? More significantly, those who successfully cross this threshold often experience a qualitative shift in their life trajectories. What underlying wealth logic and survival truths lie behind this phenomenon? In today's world where social consumption and digital payments are deeply intertwined, reasons to spend have been meticulously engineered by commercial logic. Open any social platform, vacation photos from influencer-endorsed guest houses, unboxing videos of limited edition trendy goods, and check-in posts from high-end restaurants all broadcast the standards of a refined lifestyle. In physical stores, slogans like limited-time discounts and spend and save promotions stimulate the consumer nerve, while the painless payment models of credit cards and consumer loans completely eliminate the stinging sensation of cash transactions. This meticulously crafted consumption environment is steadily eroding the savings capacity of the younger generation. The 2025 Central Bank Survey on Household Savings Behavior clearly indicates that among the domestic population, aged 18 to 45, approximately 45% have never accumulated stable savings exceeding 100,000 yuan. They blindly emulate the lifestyle patterns of high-income groups, using consumption to construct a false sense of affluence while turning a blind eye to long-term financial security. Caught up in consumerism, living paycheck to paycheck or even living in debt has become the norm for many young people. A 2025 Huizhou News Network survey revealed 23-year-old tech enthusiast Zhang purchased a camera worth 2 months' salary through installment loans, then bought matching phones and headphones. When all 12 installments matured simultaneously, 60% of his monthly income vanished into repayments, forcing him to cut food expenses just to survive. A 26-year-old teacher, Zhao Chan, survived on instant noodles for 2 weeks to afford a 3,000 yuan luxury face cream, driven by the anxiety that all my colleagues are using it into irrational spending. More alarmingly, the proliferation of electronic payments has made borrowing effortless. Some young people unwittingly activate online lending tools by overlooking the fine print on payment pages, only realizing their debt when repayment reminders arrive the following month. Psychological research indicates that each additional hour spent on social media increases the likelihood of impulsive spending by 27%. Meanwhile, the commercial holiday culture fosters an atmosphere where not celebrating equals not caring enough and not buying equals lacking taste, trapping young people in emotionally coercive consumption. During visits to 20 community banks across Beijing, Shanghai, and Guangzhou, multiple client managers reported a consistent pattern. When young clients inquire about wealth management, their primary concerns often revolve around how quickly can I make money and are there high-yield, risk-free products. Rarely do they ask about how to build an emergency fund or how to plan long-term financial goals. Ms. Li, a wealth manager at a Beijing branch of a state-owned bank, disclosed that throughout 2025, only 12% of clients under 30 proactively inquired about savings planning services. The remaining clients focused exclusively on short-term, high-yield products. This misalignment with wealth accumulation principles traps many in a vicious cycle of chasing gains and cutting losses, hindering the development of consistent savings habits. In reality, the core value of saving 100,000 yuan lies not merely in the figure itself, but in providing individuals with the confidence to withstand risks and the entry ticket to wealth appreciation. This value became increasingly evident in 2026, when interest rates entered the 1% era. A late 2025 report by 21st Century Business Herald revealed profound transformations in the bank deposit market that year. 6 major state-owned banks led interest rate cuts, reducing demand deposit rates to 0.05% and lowering 3-year and 5-year time deposit rates by 25 basis points. Shareholding banks and smaller institutions soon followed suit, with some smaller banks even experiencing inverted long-term deposit rates. Against this backdrop, the deposit migration phenomenon intensified, with household funds accelerating their shift from traditional deposits to diversified assets like wealth management products, insurance, and gold. However, this migration hinges on individuals possessing initial capital available for allocation. A January 2026 report by China Wealth Network indicates that as asset management regulations deepen, the wealth management industry is shifting from pseudo-stability toward true stability, with the disappearance of valuation magic enabling investors to more clearly recognize investment risks and returns. Leaders from multiple wealth management institutions stated that in 2026 the industry will shift from scale competition to a battle for returns, building return stabilizers through multi-asset allocation and derivative tools. Sun Zhangji, Chief Investment Officer of Beijing Bank Wealth Management, explicitly stated that in 2026, the company will focus on developing low volatility, stable strategy products for clients with lower risk preferences to meet their deposit substitution needs. For clients with moderate risk preferences, the company will deploy fixed income plus strategies. However, whether it's low volatility stable products or fixed income plus products, while their minimum investment amounts are low, achieving substantial returns still requires a certain principal size as a foundation. 100,000 yuan is precisely the ideal starting point for ordinary individuals to begin diversified asset allocation. For the average salaried worker, accumulating 100,000 yuan is a battle against personal desires and spending habits, and it's also a journey of financial awakening. This journey is often tedious and protracted, akin to planting trees in a desert demanding sustained perseverance and self-restraint. Many experience anxiety during the initial accumulation phase, as capital growth falls far short of expectations. For instance, at the 2026 mainstream bank rate of 1.85% for a 3-year fixed deposit, 100,000 yuan yields merely 1,850 yuan in annual interest, barely enough to cover 1 month's incremental living expenses. This initial experience of low returns leads many to perceive frugality as pointless, prompting them to abandon their savings plans. Yet, from the perspective of wealth accumulation principles, the core value of this stage lies not in earning interest, but in cultivating delayed gratification and rational planning awareness. Just as farmers must wait from spring sowing to autumn harvest, wealth accumulation requires the sedimentation of time. To successfully cross the 100,000 yuan savings threshold, one must first establish clear financial planning by distinguishing between essential expenses and non-essential expenses. The financial transparency framework proposed by Hubaojin Manager Platform in 2025 offers valuable insights. Its core principle categorizes consumption needs into 3 tiers: survival, development, enjoyment. It prioritizes essential survival expenses, allocates development expenses reasonably, and strictly controls discretionary enjoyment spending. Practice shows this classification effectively reduces irrational spending. For a salaried worker earning 5,000 yuan monthly, allocating 50% to fixed expenses, rent, food, commuting, 20% to mandatory savings, and 30% to development and enjoyment spending allows accumulating yuan 100,000 in roughly 3 years without compromising basic living standards. Furthermore, establishing an emergency fund is crucial. Even saving just 500 yuan monthly for contingencies can prevent savings plans from derailing during unexpected events. Data on household consumption expenditures from the National Bureau of Statistics for the first 3 quarters of 2025 provides a practical basis for tiered consumption planning. The figures show that the national per capita consumption expenditure was 21,575 yuan, with food, tobacco, and alcohol accounting for 29.5%, housing for 21.6%. Transportation and communication for 14.4%, education, culture, and entertainment for 11.7%, and healthcare for 8.9%. The data structure clearly shows that survival-related expenditures food, tobacco, alcohol, and housing exceed 50% of total spending, while development-related expenditures transportation and communication, education, culture, and entertainment, healthcare account for approximately 35%. Leisure-related expenditures constitute less than 15%. This implies that if ordinary individuals can reasonably control their leisure spending and redirect more funds towards savings, accumulating 100,000 yuan is not an unattainable goal. Avoiding various wealth traps is another critical task during the savings accumulation process. In recent years, financial scams and high-risk investment traps have proliferated, particularly targeting ordinary individuals lacking financial literacy. A cautionary case shared by the Wangqing Shui platform in early 2026 serves as a stark warning. Zhang, a supermarket cashier, saved for 5 years to accumulate 200,000 yuan. After hearing from a neighbor that a certain wealth management product offered 8% returns, she invested her entire savings. Within 3 months, the product collapsed, resulting in a loss of nearly 30% of her principal. Administrative worker Shaoli, finding wealth management too troublesome, kept her entire 200,000 yuan in a bank savings account. The annual interest of just a few hundred yuan couldn't even keep pace with rising rent, effectively causing her funds to depreciate. These cases highlight common pitfalls in wealth management among ordinary individuals, either blindly chasing high returns while ignoring risks, or missing out on growth opportunities due to insufficient knowledge. The irrational volatility of capital markets poses an even greater challenge to savings. The CSRC's 2025 report revealed that during the first half of that year, certain popular sectors experienced frenzied trading. Social media was flooded with stock trading posts from non-professionals, creating a localized nationwide stock trading atmosphere. Ultimately, however, non-professional investors suffered an average loss rate of 27%, while professional investors who maintained long-term holdings of core assets achieved an average return of 12.5%. Data from the CBIRC in 2026 was equally alarming. China's credit card loans overdue for 6 months reached 124.3 billion yuan, a year-on-year increase of 11.2%, with 80% of delinquent users being young people under 35. These figures serve as stark reminders to ordinary individuals that during the savings accumulation phase, they should adhere to the principle of prudence reigns supreme, steer clear of high-risk speculation, and refuse to prematurely dip into future income. Notably, the Bobo phenomenon among the middle-income group further complicates savings accumulation. Research by People's Forum indicates that Bobos, highly educated, well-paid individuals who pursue lifestyle enjoyment embrace consumerism and quality living. The rise of consumer finance has made debt-fueled consumption more accessible for this demographic. Nielsen's November 2019 report, China's Young Consumer Debt Status, revealed that overall credit product penetration among China's young consumer demographic had reached 86.8%. While improvements in the social security system have somewhat reduced residents' precautionary savings, excessive debt-fueled consumption still traps many middle-income individuals in the high-income, low-savings dilemma, making it difficult to surpass the 100,000 yuan savings threshold. Once individuals successfully accumulate 100,000 yuan in savings, their perception of wealth undergoes a qualitative leap. Data from the National Bureau of Statistics reveals that those with savings exceeding 100,000 yuan enjoy 65% greater freedom in career transitions compared to those with less than 10,000 yuan in savings. This increased freedom stems from the financial security savings provide, eliminating the need to accept undesirable jobs to cover bills, abandon career transition opportunities due to financial pressure, or make irrational decisions out of panic during market fluctuations. This shift represents a fundamental transition from passively adapting to life to actively taking control of one's life. Savings empower individuals with choice, embodying the core essence of financial freedom. Mr. Wang, an employee at a Shanghai-based internet company, speaks from profound experience. In an interview, he recounted how he lived paycheck to paycheck during his first 5 years of work. To keep pace with colleagues' spending habits, he frequently upgraded his phone, bought trendy clothes, and even borrowed money to join their luxury trips. In 2023, his father's sudden illness requiring surgery left him scrambling for funds, a wake-up call that changed everything. He then implemented a strict savings plan, cutting back on non-essential spending. After over 2 years of persistence, he finally accumulated 100,000 yuan in savings. Having this 100,000 yuan gives me much greater peace of mind. When the company restructured last year, I had the courage to reject an unreasonable job reassignment and proactively resign to seek a position better suited to me, something I would never have dared to consider before. Mr. Wang's experience vividly illustrates how 100,000 yuan in savings empowers individuals with choice. More importantly, this principal amount provides the foundation for compound interest to take effect. Often called the eighth wonder of the world, compound interest operates on the principle of interest on interest, where the earnings generated from the principal are reinvested to generate further returns. According to Wind Financial Terminal data for 2026, over the past 2 decades, the average annualized return of domestic equity-oriented hybrid funds has been approximately 8.5%. Investing 100,000 yuan consistently over 10 years would accumulate roughly yuan 197,000, while a 20-year commitment could yield about yuan 472,000, demonstrating significantly higher growth efficiency than relying solely on salary accumulation. Another set of data similarly demonstrates the power of compound interest. Individuals adhering to a long-term investment strategy for over 15 years achieve an average return 4.7 times higher than frequent traders. This implies that once the 100,000 yuan threshold is crossed, an individual's wealth growth gradually transcends the limitations of monetizing manual labor and enters the trajectory of automatic capital appreciation. In the 2026 market environment, the prudent allocation of a 100,000 yuan principal becomes particularly critical. Given current low interest rates and the trend toward diversified capital allocation, industry experts widely recommend a stability-first, moderate growth strategy for the general public. The low-risk wealth management plan shared by Yuan Kingshui platform in early 2026 offers practical guidance for allocating 100,000 yuan principal. The tiered time deposit plus large denomination certificate of deposit CD combination suits those with extremely low risk tolerance. Splitting the 100,000 yuan into multiple deposits across varying time deposit terms and large denomination CDs ensures capital flexibility while delivering relatively stable interest income. Taking state-owned banks in Shenzhen as an example, January 2026 rates were approximately 1.5% for 3-month deposits, 1.7% for 6 months, 1.9% for 1 year, and 2.3% for 2-year large denomination certificates. Strategic segmentation safeguards emergency funds while maximizing interest returns. For those requiring moderate liquidity, a money market fund combined with short-term pure bond funds proves a superior choice. Money market funds like Yubao and WeChat Skian's Hangtong offer exceptional liquidity with minimal risk, yielding approximately 2.0% annualized over 7 days in January 2026. Short-term pure bond funds primarily invest in low-risk securities such as short-term government bonds and financial bonds, delivering slightly higher returns of around 2.8% annualized. Products with large-scale and stable historical performance rarely incur principal losses. Allocating 50,000 yuan of 100,000 yuan to a money market fund as emergency reserves, while investing the remaining 50,000 yuan in a short-term pure bond fund meets daily spending needs while generating higher returns than demand deposits. Annual total returns could reach approximately 4,000 yuan, significantly exceeding demand deposit interest. A representative from Hangyan Wealth Management stated in an interview with China Securities Journal that in 2026, wealth management institutions will continue to consolidate their low volatility, stable advantages. Their asset allocation will balance safety and returns. On one hand, increasing exposure to low volatility assets to build a solid foundation for stable returns. On the other hand, strengthening multi-asset, multi-strategy investment capabilities to enhance return potential. This trend undoubtedly benefits ordinary investors with 100,000 yuan in principal, offering more low-risk, stable wealth management options that ensure capital safety while enabling steady asset appreciation. From a societal perspective, the ability to surpass the 100,000 yuan savings threshold reflects varying wealth accumulation capabilities and risk tolerance across different demographics. According to 2025 data from the People's Bank of China, 78% of China's high-income individuals allocate over 30% of their monthly income to long-term savings or investments, while only 12% of low-income individuals maintain regular savings plans. This disparity stems not solely from income levels but fundamentally from differing mindsets toward wealth. High-income individuals typically prioritize long-term financial planning, understanding how savings and prudent investments foster sustained wealth accumulation. Conversely, low-income groups are more susceptible to short-term consumption temptations, often trapped in a spend-as-you-earn cycle that hinders consistent savings. The implications of this mindset gap are profound. Amid intensifying economic headwinds and heightened market volatility, individuals with savings exceeding yuan 100,000 are better equipped to weather unexpected risks like unemployment or illness, maintaining life stability. Conversely, those lacking savings face greater vulnerability to crises, which can strain family relationships and undermine mental well-being. A 2025 study by a social research institute revealed that 68% of individuals with savings below 10,000 yuan experience significant financial anxiety, compared to only 23% among those with savings exceeding 100,000 yuan. Alleviating financial anxiety allows individuals to focus more energy on work and daily life, creating a virtuous cycle. To help more people cross the 100,000 yuan savings threshold, both individual awareness and societal collaboration are essential. Financial institutions should enhance financial literacy by offering accessible savings and wealth management courses to foster sound wealth management concepts. Meanwhile, regulators must further regulate the consumer finance market, cracking down on excessive borrowing and deceptive marketing practices to protect consumer rights. Simultaneously, companies can guide employees towards sound savings habits through initiatives like financial planning seminars and mandatory savings programs. At a manufacturing enterprise in Hangzhou, reporters observed proactive employee savings guidance practices. Partnering with a local bank, the company launched a targeted savings plan where employees voluntarily allocate a percentage of their monthly salary to a dedicated savings account, with the company matching a portion of the savings each month. According to company management, over 60% of employees have joined the program within its first year, with 30% accumulating savings exceeding 50,000 yuan. We aim to help employees build savings habits and enhance their risk resilience through this initiative, benefiting both individuals and corporate development, stated the company representative. Reflecting on the essence of wealth accumulation, we recognize that the core value of saving 100,000 yuan lies not in the numerical amount itself, but in the financial discipline and risk awareness it embodies. It marks an individual's transition from passive consumption to proactive planning, serves as the entry ticket from wage dependency to wealth control, and provides the confidence to shift from anxious survival to a life lived with ease. In this era of rampant consumerism and heightened market volatility, crossing the 100,000 yuan savings threshold is no longer merely a financial goal. It's a journey of self-management and cognitive evolution. For the average person, accumulating 100,000 yuan in savings is not an unattainable dream. It requires neither overnight fortune nor luck, but rather daily perseverance and self-restraint. Beginning with distinguishing essential from non-essential spending, starting with monthly mandatory small deposits, and learning basic financial literacy, every minor adjustment brings us closer to this goal. When we free ourselves from consumerism's grip and short-term temptations, learning to befriend time, we discover that 100,000 yuan in savings brings not only wealth growth, but also control over our lives. The market landscape of 2026 presents both challenges and opportunities. As the banking wealth management sector matures and financial literacy becomes widespread, more people will recognize the importance of saving and cross the 100,000 yuan threshold. When ordinary individuals achieve this milestone en masse, society's wealth distribution will become more equitable, and its resilience to risks will significantly strengthen. After all, true wealth accumulation is never the exclusive privilege of the few, but the steady progress of the many. Returning to the original question, why has 100,000 yuan become the pivotal threshold for ordinary individuals? The answer likely lies in its significance as a marker of financial awakening, the foundation for activating compound interest, and a safeguard for life choices. On the path to pursuing wealth, we need not rush for instant success or envy others' rapid achievements. Instead, we should stay grounded, establish sound savings plans, and avoid wealth traps. Time will ultimately deliver the fairest reward. For the true essence of wealth accumulation has always been this: slow is fast and steady is winning.